think this is not the first time China have property issues or crisis. In the past, the government can invest more into property to generate V-shaped recovery. However, given the success in urbanization, home ownerships are already high. Household debt to GDP or disposable income is also at very high levels. So that will actually cap the upside you could come from growth in the property sector. On the other hand, as property is a significant part of the GDP, uncontrollable slowdown of it will cause problems to consumption as well as impact to the financial systems. So the government need to make sure that to control the downside support of the property sector, and in that case that can stabilize the economy, stabilize the confidence of the household and the business community, and the economy can normalize from there. There are a few aspects. I think from the secular growth driver perspective, we continue to see innovation-driven growth stories in industrial upgrades, moving up the value chains along the way, continuing the stories we have seen in the NEV, in IT, in alternative energy in the past few years. There will be sector rotation there, but we do believe that understanding the market, understanding the industries better will make market volatility more an opportunity than investing in these sectors. Second, on cyclical aspect, we do see that there's some recent stabilization in cyclical factors, including PPI and PMI. If this momentum continues into the next year, that will provide a good cyclical support to the market earnings. Number three, we do see that there are some concerns about legacy issues about property and local government fund financings, etc. We do believe the government has the ammunition as well as the policies, measures to stabilize this situation. If this can be communicated clearly to the investors, that will also stabilize investor sentiment and as well as the market performance. And finally, we do see the potentials from market-oriented reforms, whether it's in the form of SOE reforms or the stock market structure reforms that will benefit the investors, reducing the risk premium, as well as providing alternative yield and value investment opportunity to investors. I think geopolitics is certainly a big issue because it's a big election year in the region as well as in the US. So there's something we need to stay alert about and respond to the changes and hedge the risks along the way. Second is that the policy framework related to containing legacy issues and property markets and local government financings. This has not been communicated clearly to the investors. We see risk as well as opportunity in this aspect.